All right, guys, you're welcome once again to this academy, Ola-Wealth, and here we make money without making noise. All right, so I've said I was going to drop this video, and I have to do that before the next. That's before tomorrow. I need to drop it, and that is why I needed to work on this right away. So let's get into it. The main objective for this video is to just as I listed on our academic group, is to show us a simple way to analyze the market and to determine your entry point, and also to tell you what to do when the market is being manipulated for long. Yes, the market that you're trading can be manipulated. It is normal. In fact, I always say something: when you're trading, expect manipulation. I will come to that at the course of this short tutorial also. And then I'll also be telling you some proper risk management and also money management for crash and boom. And I will also be revealing or telling you my own view on the kind of lot size you should use for certain accounts, and also how to manage your psychology in trading. But the first thing I would like to say is this: whether you want to accept it or not, whether you want to like it or not, psychology is all it takes in trading. In fact, 90% of your success in forex market will be as a result of your psychology. 90%. Then the remaining 10% is discipline to obeying your strategy. 90% is as a result of your psychology, how you position your mind, how you see both winning and losses. Because there are sometimes you will need to take some losses. So how you see them, how you see your winning, how you see your losses, these are this is what gives you the 90% win rate in trading this market. And also the things I just want to say this few things so as just to clear the way. Your psychology matters a lot. Your psychology constitutes the 90% of either your wins or losses in the forex market, including the synthetic market as well. So if you want to win and if you want to lose, you need to have a stable mind. You need to know how you manage your losses as well, and how to get back into the market without fear of anything, and also how to deal with manipulation. So I'll be speaking on this. This is just a way of introduction. I will also be speaking on each of them, and then I'll be analyzing the market also. But I'll be starting from, if you notice, I'm starting from the psychology down to the top. So having speak on the fact that the psychology matters a lot, because a lot of time the market can be manipulated and then you may be in a trade. So what do you do in such cases, or how do you manage it? Do you just cut off your losses, or do you just say, let me just shut down on this and then walk away? Well, I'm speaking about that first because this is actually the major thing we need to know, and then how to discipline ourselves in the market. This is a whole lot. This will actually do you a whole lot of good if you pay attention to this. So having said that, I will move to the proper risk and money management. Now, if you're trading, you can see my favorite markets. I've always said it. Make sure you have some markets that you understand, the market that you can make your own. Don't just say yes because all the markets are available, I must trade all of them. Now, the truth and the fact is this: people who trade all markets suffer more losses. Yes, even the professionals you see, that Willis, Geoffrey Benson, all of them that you're looking at there, they don't trade all markets and they have their own favorite peers. They don't just say, well, this market is available, I'm just going to go ahead and trade all of them. wow, I need to make all the money, guys. They don't. So you must understand your strategy first. Having understood your strategy, know the kind of market that your strategy works for. Okay, so these are some of the things you need for success in trading. This, in fact, without this, you may likely not make any money out of forex market. Probably after 4, 5, 6 months, you will notice that you've actually made more losses than profit. And you don't actually judge a good trader with just a single day trading or 2 days or 3 days trading. A good trader is being judged based on either you can judge yourself being good at least after 2 months of having consistent results, or 3 months or 4 months. So this is exactly how you judge yourself as a good trader, and this is exactly how you manage yourself and your psychology in the correct forex market, especially when trading. Make sure you also have your own favorite market that you trade. Understand your strategy and stick to it. So this is the first part of the video. The second part, okay, let me include this also in this first part of the video, which is the proper risk. I think I'll be ending this with a analyzing the market for boom 1000, boom 500, and crash 300. I'll be separating each of them to make it easier for you to also go through. So the next thing is proper risk and money management. For instance, if you have an account of $100, what kind of lot size should you use? For if you're trading boom 500, sorry, if you're trading boom 1000, do not use more than 0.3 lot size. If you're trading boom 500 and boom 1000, do not use more than 0.3 for your lot size. Well, in some cases, for boom 500, if the market is sitting very well, I will also show you when the market, where you could say, well, the market is sitting well here. I will show you when you can even increase your lot size to 0.4 or 0.5. Yes, I will do that as well. Now, using $100 capital, for instance, do not use more than 0.3 lot size. And you can see your lot size here. For instance, if I'm to open this trade, for instance, you can see this my lot size. So you need to reduce this. If you're using $100 equity, all right, change this to 0.2, 0.3. Okay, change this to 0.3, and you can go ahead and then either sell or buy, depending. But then there are times you need to use 0.4, 0.5, depending on the market direction. I will also show you, I will be telling you more about that shortly also. So now, having said this, I think I'll be moving on to, if you're using probably like $200 account, just 0.6 is okay. Then if you're using $1,000, you can be using even up to 2 lot size, 1.52, depending. If you want to manage your risk very well, you can be using 1.5 for boom 1000 and crash. Boom 1000 and boom 500. You can use 1.5 because that will enable you minimize your losses in case the market has been manipulated beyond your own chart, or beyond your own view of the chart. So it helps you reduce your losses in some cases. But if you actually follow this very well, and then you follow this analysis the way I'm going to be showing you, you may likely not have any loss. Actually, you may likely, I'm not saying you will, you may not, but you may likely, if you actually follow it very well, you won't suffer any losses. By God's grace, you won't. All right, so now if you're using $1,000 capital, I've told you use 1.5 or 2 for boom 1000 or boom 500, and if possible just use 1.5. I do use 1.5 more, and if you've been looking at some of my trades recently, you'll notice it's 1.5 that I've always been using. And remember, remain with your market. Any market that blesses you is your market. Don't jump here and there, and then don't say you must trade on market just because you understand how to read the chart. No, Make sure you stay with the market that blesses you. So having said that, I will be moving to what to do when the market is being manipulated. Very good. For instance, boom 1000 today has been manipulated, and then I actually gave a signal. If you follow the Telegram channel, I gave a that's the academic group. I gave even on a free signal group. I gave the channel the signal as well that the market had actually they can actually start looking for a good sell opportunity. The reason why I gave the signal was because this market had been manipulated very well. And if you look at the boom 1000 market, I'll be I think I will need to move this particular one to when I'm doing the analysis. All right. So what do you do when the market is being manipulated? I will say it while I'm analyzing each of the market. So for now, let me just cut off this introduction part with this summary. Your psychology makes up the 90% of your trade, and remember, your psychology also includes your risk appetite. If you need money now, there is a way your mindset will be when you're trading. If probably you want to solve a problem and then you just have an urgent need, there is a way your mind will also be towards money. And then when you see a market just flying, going everywhere, you will think, wow, let me just jump in, man, and then pack this money. Well, that may be the reason why you may suffer more losses. So, how you manage your psychology constitutes the 90% of your win rate in this market. And also remember, if you're using 0 point, if you're trading boom 1000 or boom 500, which are my favorite markets, do not use more than 1.5. Do not use more than 2. In fact, in most cases use 1.5, but do not use more than 2 lot size. And if you're trading with $100 account, do not use more than 0.3 or 0.4. And if you're trading maybe $20, do not use more than 0.2. Or if you're trading $10, you can't even use less than 0.2 for boom, for trading boom. So don't use more than 0. But the convenient capital that I would have suggested should have been like probably from $20 and above at least. And that, in fact, from $20, do not use more than 0.2 lot size. And you need to be very patient if you're actually using a smaller capital. You need to be very patient if you're using a smaller capital. I'll be explaining this more in detail by the time we come to the trend analysis for each of the market. Just as you can see here, I'm having boom 1000, crash 300, and boom 500. So stay tuned, guys. In the next video, you'll be seeing on boom 1000. I'll be starting with that. All right, guys.